Welcome back to the channel, everybody. I am Mig Alphanim. So we're going to begin here. This article was on the cryptonewsflash.com. We have a lot of big articles today. I hope you all had a great day. It's titled US dollar to lose its crown to Bitcoin and XRP as economic crisis looms after new redacted begins in the Far East. We know what's going on, right? It says anticipated, first bullet point, anticipated downturn in the U.S. economy emphasized by experts like Christopher Wood, Robert Kiyosaki, could propel significant upswing for cryptocurrencies, particularly Bitcoin, Ripple, and Ethereum. I think more than that, if you're following everything that's been going on, there is a lot of hostile verbiage between a lot of the world powers. It's very it's very concerning stuff. So that's really what I would keep my eye on as far as geopolitical tensions. Uh, Next bullet point says Ripple XRP, following favorable legal outcomes against the U.S. SEC, stands on a precipice of potentially explosive growth. Sorry, I had to try to not smack my microphone there. It says buoyed by forthcoming 2024 trial and possible collaborations with banking entities. It says here, in an environment where the global financial structure teeters on the brink, the allure and stability offered by cryptocurrencies, particularly XRP, become more pronounced. The scenario, veiled with uncertainties around the traditional financial sector, could funnel investors and the general populace toward the relative stability observed in the digital asset arena, where Ripple could possibly bask in a favorable spotlight amidst an economically tumultuous era. This deduction stems from a series of elements emerging from current financial landscapes and crypto market dynamics. It says here, Forbes, I think we just covered the Forbes article, didn't we? It says Forbes, in a recent report, outlined a grim perspective wherein the United States economy could face a potential breakdown. Well, no. Now that I do believe is a great possibility, and I think we're seeing a lot of that breakdown happening right now. But there's a lot of variables as to why that would be happening, right? It says this conjecture is significantly influenced by the country spiraling into a debilitating debt situation. And have we not been covering the global debt as well as the United States debt for a long time now? And I said that this was going to come back to haunt the United States. They've been racking up a record amount of debt every 3 weeks. Look that up. It's mind blowing. And I knew that was going to happen. Now, ask yourself this question: how does them raising all of that debt affect everyone else? Taxes, things of that nature, right? But wait, when they made that deal, uh, you know, uh, because of one of the many possible shutdowns, government shutdowns, and we have another one they're talking about might be coming in November. All these so-called government shutdowns that never happened. But anyway, they made that deal. They removed the limitation on the debt, on the debt ceiling. There's no debt ceiling right now. They can spend as much money as they please, which is very concerning. But let's continue on here. Uh, it says spiraling into a debilitating debt situation in the Federal Reserve's aggressive fiat production. In the midst of these financial adversities, Bitcoin, XRP, and ETH, amongst other digital assets, are foreseen to rally to new zeniths, capitalizing on the unsettled spirit enveloping the traditional financial spectrum. Yeah. Confidence in the legacy financial systems is at an all-time low. So now let's go here to another article. Okay. So now this next article here is from coinpedia.org and is titled XRP gets a boost as Mexico Central Bank explores Ripple partnership. Wow. I mean, we've had some close ties with Mexico in the past, but now this is it's getting very interesting now. Mexico Central Bank, Banco de Mexico, has caught the attention of the crypto community with its potential collaboration with Ripple, the leading blockchain and cryptocurrency technology firm. This development has ignited excitement among XRP enthusiasts and the market at large. So what exactly has got everyone talking? Let's dive in. It says Ripple's growing partnerships. Ripple has made a name for itself with its blockchain-powered payment solutions, with its digital currency XRP serving as a crucial component for efficient and cost-effective cross-border transactions. This development comes from two key factors already impacting XRP's market. They talk about the verdict that we received from Judge Torres, but let's go here. XRapid. But what's catching our attention today is the Banco de Mexico interest lies in Ripple's XRapid solution designed to bridge the gap between different fiat currencies, such as the US dollar and the Mexican peso, using XRP as a, quote, bridge asset, unquote. XRapid boasts the ability to process payments swiftly, no pun intended, that's very funny, typically within 2 minutes or less, while significantly reducing costs by 40 to 70%. This marks a notable improvement over traditional cross-border money transfers, which often take 3 to 5 days to come with substantial fees. Understanding the impact, and we'll leave off here. We'll just read this little tidbit. I'm skipping a lot. It says, if Mexico's central bank adopts Ripple's technology, it may create a surge in demand for XRP, potentially increasing its value. Additionally, adopting Ripple's technology could streamline remittances for Mexican citizens abroad, offering faster and more affordable options for sending money back home. It'll be interesting if that happens. I'll keep my ear open. I have a lot of people very close to me that are in Mexico, so we'll see what happens, right? And listen, some people, not everyone, are doing very well in Mexico. The Mexican population has been doing very well, building businesses. A lot of business has gone from the United States down to Mexico, so that could be an interesting dynamic as well. And they are ready to dominate in Mexico. They're ready for it. So we'll keep our eyes open and see how all this works out. So now, another very interesting article here. This is from the cryptobasic.com, and it's titled, "Can Ripple Burn All 41.9 billion XRP in Escrow?" Could they do it? Yeah, sure, they could do it, but will they do it? I guess is the real question. I know I'm going over these semantics. It's inconsequential, right? It says the XRP community speculates on Ripple potentially burning its 41.9 billion XRP in escrow amid XRP's 7-day losses. It says XRP remains trapped in a bearish trend over the past few days, with its cumulative 7-day performance nearing double-digit losses. Amid the unsavory performance, XRP community members have unearthed speculative discussions around factors that could bolster the price of XRP. Most recently, the community speculated on the possibility of Ripple burning all of the XRP tokens under escrow. In recent tweets, some XRP enthusiasts circulated posts along the lines of, quote, rumors circulating that Ripple could burn the entire escrow of 50 billion XRP, unquote. It is worth clarifying that Ripple's XRP in escrow is less than 42 billion XRP. As the Crypto Basic reported, an ex-user dubbed XRP Whale, who also shared the supposed rumor, added that such a massive XRP burn would catalyze the value of XRP beyond bounds. So similarly, other known XRP influencer accounts on the X platform have posted about the Ripple XRP burn rumor without ascribing to any authority source. I guess it just seems like just interesting discussion. And is it a possibility? Sure. I don't know if they would do that. Obviously, there's a reason that they've held on to that, and they have a lot of different uses for it. I would think anybody who had a large amount of XRP would also know that if it skyrocketed in value, that they would also share in that value. You get what I'm saying? Like, you make a lot of money holding that XRP if you're going to push it. They all got XRP. Not all, my apologies. Some of them have XRP tattoos. So this shows me that they are committed. When someone puts a mark on their body, they're committed to pushing whatever that message is forward. So I think Ripple is looking for XRP to go to an extremely high price as well for whatever their reasons and uses are. So because of that, I would lean more towards they would not burn it. I'm going to lean more towards they're going to work their tails off like they've been doing under the leadership of Brad Garlinghouse and Monica Long, all of these heavy hitters, and James Wallace, and they are going to continue to make the big deals. I think they have a lot that they're going to be announcing in the next year or two. I don't control these things. I don't know when. But I will say it looks like 2024 is shaping up to be a huge year. So we'll see how all that shakes out. All right. So now let's move on here to another article. This one here is from Bitcoinist.com. All right, a little bit of a fun article here. This one is titled, let me scroll down. It's titled XRP Price Prediction. We get another price prediction here. It says crypto analyst wave theory predicts 1,137% rise. This is another bullish XRP price prediction has made its way to the fore. Following a weekend of muted performance, this time around, a crypto analyst is expecting an explosive rally for the altcoin that could see the XRP token rally to a new all-time high above its 2018 peak. It says XRP price to rise to $5.85. When the time is right, do I think XRP can do that? Yes, I do. Yes, I do. All right. I don't think that's too out there of a price, right? It says in an X post, formerly Twitter, crypto analyst Dark Defender has presented a scenario where XRP price could rally as high as $5.85. The analyst uses a wave theory to back up the prediction, with the third wave being the most important one highlighted. This is according to the post. The first and second part of the wave theory have already been established. The first wave was reportedly when Ripple secured its first victory over the United States Securities and Exchange Commission, and the price of the digital asset rallied to 91 cents. Also, I keep in mind is how easily it did that. Easily. No partnerships or anything, just we won that part of the case, right? It was a huge moment, don't get me wrong, huge moment. But it wasn't like coming out and saying, hey, this bank is going to use XRP, this bank is going to use XRP. They're just telling you about banks at that some point in the future, like how Oprah handed out cars. You get a bank and you get a bank and you get a bank. Now if it went to 91 cents off of the SEC victory that we had, imagine when they start talking about banks using XRP, right? They can openly talk about that. All the non-disclosure agreements have expired. Then where will it go? I think it's safe to say, not financial advice, but I think it's safe to say it would just skyrocket past $1. Just my humble opinion. It says, hashtag XRP finalized the correction after $1.96 and had the wave one at 91 cents. Unquote, Dark Defender said, quote, we had completed wave 2 with a slight risk to the wick final point of 39 cents. The price above the weekly Ichimoku clouds is getting closer. We will experience how hashtag bullish XRP will be above it. I'm looking forward to it, Dark Defender. I like it. Look, I like everything that you're saying. 100%. You right. You put out some very good material. It says going forward, the analyst presents what a third wave would mean for XRP price, with the second wave looking to be serving as support. Dark Defender says this wave could see the XRP price rise to $5.85. We're going to leave off there. All right. If you want to read the rest, it's on bitcoinist.com. They have a lot more here. They have some beautiful charts also. Okay. And they talk about a fourth and fifth wave, but we're not going to go there. Let's move on to another article here. So everybody's very excited about when Ripple shares are available. And we have a little bit of news here from the cryptobasic.com, and it's titled Ripple Pre-IPO Shares Now Available for U.S. Customers. All right, let's find out what's going on. Link 2 reopens Ripple pre-IPO stock investment opportunity, allowing XRP proponents and the broader crypto community to invest in the company before it goes public. Really? Okay. Says the crypto community alongside XRP enthusiasts now has another opportunity to acquire Ripple stock ahead of the payment company's forthcoming initial public offering. Recall that 2 days ago, a high-ranking executive at the pre-IPO investment platform Link 2 hinted that the company was contemplating allowing prospective investors to purchase Ripple equity shares, once again following initial round of sales reaching capacity. In a recent statement, Link 2 disclosed that acquiring Ripple's pre-IPO shares has become open to the crypto community. The statement read, quote, Ripple shares are now available on Link 2. We remain committed to democratizing access to private market investments to all investors, unquote. In September, Link 2 introduced an opportunity for the investing crypto community who are not accredited investors to participate in Ripple shares. The initiative led to a rapid sellout of the shares. Significantly, this new announcement from Link 2 comes amid the unyielding enthusiasm for investing in Ripple stocks. So now we have this article here on the cryptobasic.com, and it's titled Expert Says Vechain to Lead $18 trillion logistics market with blockchain. Vechain has been very dominant. They've put in, I think, as much work as anyone. Their ecosystem is huge. Um, I'm very impressed with what they do, and I'm very, very bullish and a big supporter of VeChain. But it says this. Let's read this little tidbit. It says, in a recent tweet, Colin Brown, a notable blockchain researcher, highlighted the pioneering role of the blockchain-based firm VeChain in the rapidly growing logistics market. Brown particularly spotlighted VeChain's position in the supply chain market, which research has projected would reach an astonishing $18 trillion by 2030. VeChain to lead the market. It says, in a tweet, Brown emphasized that VeChain is at the forefront of innovation in the logistics industry. The researcher argued that VeChain would lead the market by employing blockchain technology, smart contracts, and the Internet of Things (IoT) to ensure transparency, authenticity, and compliance within the supply chain. Says to bolster his claim, Brown cited several examples of VeChain success stories in the logistics market. He noted Walmart's use of the platform to track fresh produce, BMW's authentication of luxury cars, and DNVGL seafood sustainability certification. Moreover, Brown cited that PricewaterhouseCoopers PwC has been using VeChain to safeguard luxury goods. Significantly, the blockchain researcher shared his sentiments about VeChain following a report from Precedence Research, a reputable strategic market insights firm with operations in Canada and India. The report underscored the potential of the logistics market. It highlighted that as of 2022, the global logistics market had a valuation of $7.98 trillion. According to Precedence Research's projections, the supply chain market is expected to reach a staggering $18.23 trillion by 2030. Notably, the research mentioned that the logistics market has a compound annual growth of 10.7% from 2023 to 2030. All right, so let's move on here. I'm just trying to get through as many articles as I can today. Um, you know, Typically I'll go very heavy on just giving my thoughts. I get to read a little bit of articles, give a lot of thoughts. Today I switch it up all the time. I switch the energies up sometimes. Sometimes I switch up how I cover the articles. Let's keep it fresh, keep it interesting. So now this is big. This is very, very big. This is from Bloomberg.com, and it's titled Deutsche Bank CEO says hard times are ahead for commercial property. Commercial property is what's going to take those banks down. So when I read this, I get a little excited. It says Deutsche Bank AG Chief Executive Officer Christian Sewing said commercial real estate is facing tough times in the years ahead after central banks raised interest rates more than expected to combat inflation. While Deutsche Bank's exposure is, quote, very much contained, unquote, the fallout from elevated borrowing costs and increased home office work in the wake of the redacted will weigh on the asset class, Sewing told Bloomberg TV's Francine Lacroix in an interview from Marrakesh. Quote, it's an asset class that deserves monitoring, unquote, Sewing said. Commercial real estate will probably, quote, go through more difficult timing for the next couple of years, unquote. I agree with that. Commercial real estate has emerged as a key concern for banks and their regulators, as the rapid surge in borrowing costs threatens to push developers into default. Many firms had piled into the asset class over the last decade to buoy revenue as negative interest rates eroded profitability. The European Central Bank, which oversees Deutsche Bank and other large lenders in the region, has been stepping up its scrutiny of such loans and recently reached out to the property valuers to assess whether their estimates are too optimistic. Bloomberg reported this week, central banks will probably keep interest rates elevated, given, quote, stubbornly high, unquote, inflation and stagflation at this point, stagnant inflation. No matter what they do, they haven't been able to bring it to where they want it to be, correct? Says, according to Deutsche Bank CEO, it's also not, quote, completely unthinkable, unquote, that rates will rise again, he added. So another person saying that they're probably going to raise interest rates again at some point. Quote, the interest rates we see now will be there for longer, unquote, C. Wing said. Quote, that is something our clients need to position for. That will also have an impact on economic development next year and in 2025. Says Deutsche Bank's investment banking division had about euro 19 billion or $20 billion in commercial real estate loans outstanding at the end of the second quarter. And they're not concerned? Maybe they know something I don't, because I would be concerned if I were them. The lender said in July, is, quote, well positioned to withstand downside risks, unquote, given its, quote, conservative underwriting standards and risk appetite frameworks limiting concentration risk, unquote. So now this next article is from payments.com, and it's just very good information to have. And I think it lends a little bit more credence as to why we're going to win and have been winning when it comes to competing with the legacy banking system. And this article is titled 95% of payouts to banks don't happen in real time. 95%, which means right now, in my humble opinion, that means there's 95% there for the taking, because we can modernize that, and we can make that happen in real time. It says here, the rise of open banking is evolving banks as we know it. Instead of traditional banks keeping consumer financial data solely within their closed systems, banks and third-party service providers can now share it through application programming interfaces, APIs. When I hear API, I think quant. It says, when it comes to consumer payouts, open banking connectivity is a significant development as it allows consumers to link their bank accounts directly using their existing bank logins and receive funds instantly. Despite the availability of banking connectivity tools, nearly half of consumers receive most of their payouts directly to their bank accounts without a connectivity tool. The reliance on direct-to-bank transfers means that consumers receive payouts the most within a week. Just 5% of payouts to banks took 60 seconds, suggesting that consumers opting for bank account transfers often do not have the option for an instant payout. Meanwhile, the ability to receive a payment in real time is very or highly influential when choosing a payment method for 43% of respondents. That's a heck of an advantage to know that information, but also to be able to deploy infrastructures that can meet those needs. That's how you bring in customers. So 39% say the same when choosing a merchant or service provider. These are just some of the findings detailed in the, quote, how open banking can provide fast and easy consumer payouts, unquote, a payments intelligence and trustly collaboration. All right. So once again, we are far out front. We're doing a great job. Everything's looking good in my humble opinion. It says consumers can receive payouts from merchants, service providers, and government agencies in several ways. Now, that I'm not concerned with. Not at all. All right, so we're going to end off here. We're going to end off with a little bit of gold news. Let's find out what's going on with one of our favorite commodities, okay? So this is from kitco.com, and it's titled Gold Prices Up 2% as Investors Look for Geopolitical Insurance During the Weekend. All right. Let's scroll down here. It says, growing chaos in the Middle East continues to fuel safe haven demand for gold as a 2% rally into the weekend also puts pressure on bears in the marketplace. Late Thursday, the Israeli government warned we're going to skip that part, all right? You know what's going on over there. Let's skip that part there. It says here, analysts have said that with so much geopolitical uncertainty and volatility, investors want to hold some insurance and protection through the weekend. It says new bullish momentum has pushed gold prices back through $1,900 an ounce. December gold futures last traded at $1,922.50 an ounce, up 2% on the day. Analysts note that gold is trading near resistance at its 50-day moving average, which comes in at $1,924.60. It says, quote, if you don't know what's going to happen during the weekend, you want to hold something that offers you some protection. This is what we've been trying to tell people for a long time. Gold, as well as silver, in my humble opinion, depending on what price you get it, it preserves value beautifully. It says, unquote, unquote here. It says, said Ole Hansen, head of commodity strategy at Saxo Bank, quote, we are seeing shorts being covered and investors scrambling to get back into gold, unquote. Although Hansen is bullish on gold, he also warned investors to use some caution at these elevated levels. I can agree with that because people that are temporarily using it are going to pull that capital out probably fairly soon. And then you're going to see that a little tad bit of volatility, but you're going to see it nonetheless. It says here, where did we leave off? I'm losing my spot here. He added that this could also be a short-term squeeze as ETF investors are still reluctant to buy gold. Quote, the ETF market is still seeing modest outflows for the week. We really need institutional investors to take an interest in gold again to see a sustainable move in gold, unquote, he said. Quote, there is still a major resistance level at $1,950. That the market still has to clear, unquote. So now that we have that information, what are we going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.